cut rates for certain, Melissa. I've argued that for a while. Just the growth and inflation backdrop would warrant, in my opinion, lower rates. The Fed went too aggressive. December wasn't needed. And the forecast would suggest rates will eventually come down. The quantitative tightening, the Fed has said, will end in September. So that's already ending. Quantitative easing, I would save that for the next downturn. But I would say the general gist and tone of what the president says, fundamentally, I agree with and have been seeing this sort of outlook for some time.
Jack, from an equity standpoint, should we be worried about all of this? Should we be worried about the president inserting himself into policy, criticizing the Federal Reserve, saying that quantitative easing should happen right now?
No, I don't think we should worry about it. I think, in fact, the last thing the president wants is control of the Fed, and that way, in that case, he'd be blamed for the direction of the economy. You know, keep in mind, 4 years ago, or it was 3 years ago, he had President Obama as his scapegoat. And as we've traversed through the last few years, this has turned into his economy. And so I think having the Fed sort of at a distance here creates that scapegoat narrative. Now, he beat up on the Fed at the end of last year, and they did reverse course. So now, he needs to push even further, just in case that, as we're moving from that 3 to 4% growth rate down to that 2 to 2.5% growth rate.
Joe, do you think there is something dangerous and different about the way the president is so openly trying to direct the Fed's actions?
No, not really. I mean, Milton Friedman, very famous monetary economist, as you know, argued decades ago the Fed should be replaced with a computer, that you should essentially set growth in the monetary base equal to nominal GDP. That's not to say I agree with that, but the Fed has always been a focus. They're so important. And the one big difference, Kelly, today versus a few decades ago, as I was listening to an interesting conversation you guys were having with Stephen Amon, is that the Fed's balance sheet now is, or at the peak, was roughly 25% of nominal GDP. The Fed effectively injected themselves into the political debate like they never have before. So this is something that I was critical of Bernanke a while ago, because they way overstepped their bounds. And, of course, they were going to get thrust into the politics, as Jack was alluding to.